I want you to pay very, very close attention to this presentation. This video might be the most important video you're gonna watch this year. So what you're looking at right here is the S&P 500 index, going all the way to, as you can see at the bottom here, 1970s here. This is a 1972 bear market price section, right? 1972 peaked out, right? 1972, early 1973. We bottomed around 1975 there. What you see is the price action and line chart, and my midterm moving average and my long-term moving average. So my midterm moving average is annotated with the, as you can see, the thick blue or vivid blue, but it's dotted, right? And the light blue, almost like a grayish there, it's the long term. So we got the midterm and the long-term moving average, and I'm going to use these two moving average all throughout this presentation. So what I'm going to do, I'm going to go through every single corrections from 1970s to today, and we're going to together in this presentation find out what has happened when we see the death cross. That's what is known as a death cross there, right? Crossing to the downside. This is what is known as a golden cross, crossing up to the upside. So we're pretty much back testing what is the likely scenario when we do see this signal appearing, when we do see that golden cross appearing after a steep decline or steep correction in the S&P 500 here. So going all the way to 1970s, as you can see, we can clearly see that in early 1973, we do see that the that midterm moving average coming down and the long-term moving average going over the midterm moving average, showing us that death cross there. We got just above this primary term moving or the long-term moving average, so it must be nullified. What's more important is the trajectory of that moving average, right? You see that the trajectory of moving average still sort of decline. Not only that, the midterm is still underneath the long term. That's very important. And there's a little, like right here, look like they're gonna cross back up, but we haven't fully crossed back up and the market fully tanked down. And we do see that lower low. We want to continue to give benefit of the doubt to the sellers. And so you can see market really heated up to the downside, crashed down in 1974. And since this death cross, as you can see, we have what is known as a golden cross here. So this is the first time we're seeing the midterm and the long-term moving average meeting here. Last time when they met, again, remember that was near the all-time high level, 1973. Now they met here again during 1975 after this market, what it looks to be sort of a bottoming process here. And then once we did witness that midterm and the long-term moving average crossing back up here, that trend continued. And as you can see, there's another scenario where we do see a correction here several months later. We even get slightly beneath that long-term moving average. But as you can see, that midterm and the long-term, they never cross down. It got close right here. It got close, but never crosses down. Therefore, there's no death cross there. Perfect. So trend is perceived as still valid, right? So as you can see, and the market continued on. However, what happened was, though, we crossed back down somewhere here in 1977. So now that so basically after this golden cross, market made a move for about 2 years, 2 years of bull market. And then you can see, we finally see that cross right here, 1977, looks like in February. Same scenario, little kind of pop right above the long-term moving average, but as you can see, it's pretty swiftly, there's a spacing in between, right? You can see I'm drawing lines here, like long-term moving average and the mid-term moving average, they've never met. Once they met here, 1977 February, they never met until April or May of 1978, as you can see, and the market looked like it reversed back up to the upside very, very quickly. You can see that long-term moving average is not above it. The mid-term moving average is underneath it. Yet again, the price trying to get above it. It's just trying to, you know what I mean? Trying to get that air. But then again, not able to keep that traction going. That mid-term and the long-term moving average never crosses back up. As you can see, the spacing in between, it gets wider and wider. And thus that downtrend has started, right? And you can see the lower highs and lower lows. And when this happens, we want to give benefit of the doubt to the sellers. And then here comes in 1980s, we have a good market returns, the bull market returns. So what happens is we see a golden cross here. You can see a very strong bullish move that lasted a little bit more than a year or so. And you see, when that secular bull market started in 1980s, we did see that golden cross, and we do see a little bit of pullback a couple times here, but it's not like in a secular bear. So we do see a correction, I'll assume 20-some% or so, and then market gets right back up. We see that golden cross confirming that market is ready to, get back to continue and resume with this primary secular uptrend. So again, this is 1984. So as you can see, once that golden cross happened here, that bull market continues, that bull run continues. Keep in mind, even when we did see that decline right here, and this is likely a lot of people get scared right here, right near the lows. A lot of people are like, oh my God, that, we're gonna see another huge crash. It's gonna be like 55% decline, and they're gonna start exiting here. And you can see that midterm and long-term never crosses down, and a lot of times what happens is most people miss out what may come later, and that's this move. Look at that. Very, very fast up move there in 1985, 1986. And then we go to 1987 here. This was just a lot of sideways, but never fully crossed or anything like that. As you can see, very ambiguous. But I have to say, you might say, hey, well, okay, that looks sort of very hard to judge. But you see, you got the low here, and we got these higher lows. So not only you want to pay attention to some of the moving averages signal, but also look at the higher lows. And I can even draw a trend line there. Some of the support line is holding. So you would want to give benefit of the doubt, higher high, higher low. Finally, we broke out to the upside, and we saw very fast up move there in 1987, early 1987 to late 1987. This is what is known as 1987 Black Monday. Happened in October 1987 there. So we see that very prominent death cross there. But about a year later, so maybe less than a year later, we did see that golden cross in 1988 July. And once that happened, what happened? We got right back up to new all-time highs. Perfect. So you can see there's a death cross there. There's a golden cross here. We make new all-time highs. And you can see that midterm and long-term, they never cross, like get close. Again, after you go through something like 1987 Black Monday, people are very scared. So how are you gonna trade? How are you gonna stay in the trade? If you thought that 1987 Black Monday and some of those lows were good opportunity to buy some of the stocks cheap, for that you can get into some of these stocks at value, And then you want to like, you know what, I'm going to hold this thing, man, for the next 5 years. I'm really going to like ride a long term so I can really have the compounding working for me. And I can really have my portfolio, you know what I'm saying, really maximizing its gain. But then what happens is you see this decline right here, and some of these declines, people are gonna start freaking out. You know, and you'll see if there was a social media back in 1980s, I can already see how, you know what I'm saying, there's gonna be a bunch of people saying, oh, this is it, we're gonna have some 1929 Great Depression. So all these lows were really the traps there. Because if you look at, but if you're following this midterm and long term, you'll realize it never crosses down. Not here, not here. It's been faithful. Not only that, again, trend line here, one more trend line. You want to draw that trend line, higher lows, higher lows. The market did not violate and make lower highs and lower lows. It made higher lows. And the midterm and long-term moving average, they're staying up, not crossing down. Look at that, how swiftly. And then you can see the bulls really found that traction. It gets faster and faster and faster, not even retesting the midterm moving average, make new all-time highs. And as you can see, it all came about after that golden cross signal there. And then we come to 1990s, that cross, golden cross, boom, new all-time highs, right? I'm gonna speed it up here. 1994, again, we see this dead cross, golden cross, but in a secular bull market, you don't see this getting into a downtrend. What likely do is either we see a kind of a, 20-some%, I'll call it a healthy correction within a bull market, right? This one is 15%, and then you see like 12% here, but more like I look at this as a consolidation. But then that signal came about when this thing crossed back up here, right? That cross here, maybe you should be worrying about it a little bit. And then when you saw the golden cross right there, market is ready to resume. And we saw one of the biggest bull run ever is 1995 all the way to 2000. As you guys know, the bubble, right? This was the biggest bubble we've ever seen in the history of stock market. Is 1995 to 2000, the dot-com bubble. And that's what happened here again. And then 2000 happened, the dot-com bubble bursted, right? And that's the dead cross. So, after, I mean, think about this. After 19, like let's say, you've been long since 1995 or whatever. You've been long-term investor since 1987, let's say. And you just ride it all the way up. And market just went berserk to the upside. And just unthinkable number. Market just went crazy to the upside, right? And then finally, after market going pretty much like vertical, parabolic from 1995 to 2000, and you see the golden or dead cross right there, what do? That's a warning signal, right? Because NASDAQ crashed 80% in 2000. S&P did about 50% or so. But even this 2000 bear market, as you can see, we see the dead cross and then golden cross comes here, right? But nothing, there's no whipsawing action. It's very straightforward. So if you got out anywhere here, this signal has given you the signal to get back in long when in 2003, April or so, when we saw that golden cross happening there. Yay, hurrah, hooray. And that made a way for all-time high level, all the way to even made a slight new all-time high, but you can see. So that golden cross signal right here yielded about 4 years of bullish run. Perfect. 4 years ago. And then 2008, the financial crisis, subprime mortgage fiasco happened. And as you can see, led by the banks, we see the stock market crashing back down very heavily. Again, that's 2008, 2009. We can see once again, we see that cross there, right? And then you see the spacing between, they never come close. And the spacing gets wider and wider as the selling intensifies. Finally, in late 2009, I'll say about July here, we see the same signal right here, golden cross. America. right? So if you saw this signal in 2009, that would have been a great opportunity. And it comes about 2011, we see the same signal there, but quickly recover, golden cross there. Same thing in 2015 and 16, that cross, golden cross, pretty quickly recover. This is what is known as the Trump rally right here. And then we came to 2018 and 19 very quickly. We saw 22% or so, very abrupt decline here. We see that cross there. We see a golden cross gets back on the all-time highs. And then what happened in 2020? COVID happened. Market plunges 35% on the S&P in just about a month. The biggest, fastest, sharpest decline ever recorded in the history of a stock market, right? That cross was here. And then how do we know when to get back? How do we know market is ready to resume? That's going to be the golden cross. And a lot of times when the market reverses so fast, this signal right here could be the lag, because by the time you saw the golden cross, this thing already made all-time high level. So you will need other tools to figure out if this was the low. I was bullish during April, May, and all throughout this year in 2020, as you guys know. So by the time I saw this signal, that was a confirmation on top of all the signals and all the analysis I've gone through here, why I believe that we're going to see a very fast reversal, and it's going to be a lifetime, generational lifetime opportunity. And then when the golden cross happened in September or so, that just edified the fact that it was going to continue in 2021. We did that for entire year. Look at this run from 2020 to 2021. Market made a very strong move here, and as you can see, the midterm and the long term, the spacings in between very solid and steady as the uptrend continues. And then that spacings kind of disappeared, as you can see. That's when the death cross came about in you know what I'm saying, in 2022, right there. Yet again, he kind of poked his head up a little bit, but as you know, right here, the long term and midterm, they never cross back up. And for the first time, ladies and gentlemen, since this decline of 2022, we have golden cross. That appeared actually in sometime early April. And this is a signal actually we've been watching here at Traders Club once it came on, and I've been actually anticipating, because this thing, what happened was you can see the spacings in between got larger and larger, and then it's like getting tightening here, tighten. And so that's why when this got really tight here, and then we finally crossed up, this thing finally crossed up, looks like early April or so. Now it's May, early April, but this thing started to really tighten up in early this year. So I actually been following this, and I wanted to kind of see how this is gonna pan out. Is this gonna be sort of like get close and then reverse back down, or is gonna get close and then crosses up? It actually crossed up. Perfect. And it's been crossed up like this for about a month now. And you can see now, you can see they're fully crossed up now. Yay! Hooray! So if you want to get something like this, updates on something like this, feel free to look into my mini membership. I'm still offering special deal for 2023 here. This number will go up at some point. And also, if you're wondering about, what positions I'm currently holding, what I'm going to be buying going forward, how I'm going to be dealing with this market and all that stuff, there will be full membership plans underneath it, so you can take advantage of that.